Again, and not every setup meets everybody's style, right? And you got to figure out what style works for you. But there's definitely a lot of different ways you can trade this system. And so what I did, I just kind of went over and looked at the past, some of the things noted in the profits channel over the past 30, 45 days, and just kind of pick some. I try to get a good representation of some of the trades that were posted. So I start off with some of the trades by Coach Tanner. Of course, he's probably one of our best for sure at trading this on options. So I thought to highlight a couple of trades that he did to kick us off. Then I'm gonna go over one that Coach did on an Amazon trade and just kind of learn from it. So one of the things I want, as you'll hear, kind of a repeatable theme as we talk through these is first question: what is the higher time frame context? Right? Are we in a clear uptrend? You'll note on some of these trades, they're right at what I call key pivot point. And that's something you're gonna see me point out as we talk about these trades. The other thing you'll see, I want you to kind of pay attention to is what was the quality of the reaction to that zone when it tapped it? Was it a strong reaction? Did it hang around? Okay, that's the first question. The second question you'll look at is, well, what was the quality of the breaker structure? And there's a lot of different ways to get your signal for what we call breaker structure. There's not just one way to do it. There's a classic way, right, which is that 50% retrace break. But there's other ways too that you can interpolate a breaker structure to give you the confidence to take the trade. Because if you think about it, breaker structure simply means you've got some signal, right, that indicates that the trend has reversed for that day, right, in your favor of your trade. And so price came in, right, tapped that zone, and then you're looking for some kind of confirmation, and we use the word break of structure, that says, yes, it's flipped and it's in the direction of the trade that you want to take, and you take the trade. So we'll talk about that. Had just had earnings. This is something that's really important. This is why I always pay attention to what happens after earnings, right? Right after earnings, we had this major gap up. So clearly, right, there's a lot of a bullish, even though there's a sell-off after the gap up, that was just some initial profit taking, right, off of that bullish move off of earnings. While there was a kind of a sell-off after the earnings, the trend is still overall up. Now, what you're waiting for, and you'll see here in a couple of trades, is for the lows to hold, which you see happening right here along this line. And this frames something what I call pivot points. If you notice along this line here, right, I'm going to turn off this thing, you'll notice that we have these moves, right, these runs. Start here, then you had another run that starts here, go here, right, and another run that starts here to go here. This is what I would call a pivot zone. Pivot zones is simply an area where trend typically reverses to the upside. And if you think about it, right, same thing up here. Look at this. See that? See how price kind of came up, and then boom, pivot off, pivot off. This kind of creates you the context. Sellers are up here for sure, right? Because this is where the speed typically happens to the downside, right? And we know buyers are more concentrated down here. So when you're playing supply and demand, you want to kind of know where these pivot points are, because if you got a demand zone that's located along this pivot point, there's a higher probability you're going to be successful in your trade, right? So let's kind of go in a couple of trades that Coach Tanner made. So I'm going to zoom into this little area here. I know I got a lot of junk here. Let me try to get some of this out of here so we can kind of see what's going on. And by the way, if y'all have questions, just either raise your hand, jump in, or say something in the chat, and I'd be happy to pause. So let's talk about this first one. So again, kind of as context, I'm actually going to go ahead and do this, do replay, so we kind of get some of that noise out of there. So as context, let me just get out of the way. This is another trade. But Tanner had noted before market opens, let me do that too, so we can kind of get a sense of before market open. So before market open, there is this, basically demand zone that broke structure, right? Broke these prior day highs, right? And so he had flagged that pre-market as, hey, this could be an opportunity. And if you notice also, look at this nice, clean stair step up, right? Structure as another indication that, hey, if I get a tap of one of these demand zones, I feel pretty confident, right? Because look at what happened here, right? Boom. What happened here? Boom, right? So I'm just trading a repeatable pattern here, right? So if I get another tap this next day, I feel pretty confident with the breaker structure that I could get a trade. So let's kind of see what happened there. So I'm going to go to 2-minute time frame. Basically, you got this gap up, right, closed above these highs here, create your breaker structure. Got a tap of that demand zone. There you go. There's your break right there. Your breaker structure right there, right? Got a tap of the demand. Nice. See, first thing we'll always talk about, notice the reaction. Strong, symmetrical V pattern reaction. That's me, the first criteria I always look at is, do I get a strong reaction? I'm okay sometimes if there's a little bit of a dip. Like say this maybe they could have done a stop hunt here. I just want to see a strong symmetrical reversal pattern, right? Indicates that buyers are present. The other confirmation we get is the break of the prior day high. Right, get a candle closing above that high. The other thing, this is something Tanner's also been focusing on a lot with his trading, is don't just get in on the retrace, right? He didn't just jump in on this 50% retrace. He waited for some signal that price was reversing back to the upside. And we got that, you'll see here in a second, engulfing candle break, right? At that point, once you got that engulfing candle, that gave Tanner the confidence to take the trade. And then you see here, right? Nice progression. Never even went negative, I believe. Just kind of steady progress until he hit his profit target. Now he uses his profit target. You see this little down zone right here, right? Boom, right there. That became the area of interest for your profit take.
Sorry, I have a question.
Yeah, go ahead, Shauna.
So he was looking at this the day before. Is that what you were saying?
So going back, so before, when you always start off with this would be that's 358. That's the last candle of the day right there. So you always go, you get pre-market morning, right? And you start off by, you definitely want to focus on stocks that pre-market open that are opening at or near, ideally, this demand zone. So here, I've done on 30-minute time zone. I'm sorry, this looks kind of bad, but you see this move here. That I would, the clue is this a big high? What's the word I'm trying to say? Fast zone? No, I would say this zone represents a continuation, right? It's almost like a market structure continuation to the upside. It's not. Let's see if I can give another example for fast zone. Clearly, that's fast, right? Gap up, vertical move. This is also pretty fast, right? This is more what I'll call a typical, see the steady grind up. That's kind of what I would characterize that type of demand zone. It's certainly not, I would not call it a fast demand zone, but notice, I think what gives you confidence is see how steady that rhythm is. There's no break of these zones are holding as it's grinding back up. But that's a good question. Unless any other questions about that particular trade before we get into the next one? Not, let's keep going. I'm going to fast forward us. Give me a second. Sorry for all this annotation stuff. I'm going to get this out of the way. Give me a second. I'm trying to figure out a good way to do this. It's still kind of busy, but this is what I call a gap up created demand and coming in on the retrace. So sometimes, particularly, again, notice where we're at. We're at this, again, this pivot, right? Where you had this move happen. You had another move happen. This is like the prior day, right? Off of this location. This is what I call, you can see this strong move happened here. It happened here. So what we got is a gap up. So let me just kind of actually give you some annotation. I'll talk about it. That way this looks a little cleaner to watch. Guys, let me go to 2 minutes. In this particular situation, you have this is what I call like a gap up break of structure, right? So you can kind of see the range of the prior day is somewhat like that, right? You had a gap up that broke that structure, right? So in essence, you got confirmation, but this is what I call created demand, right? There's confirmation there's buyers here by virtue of this gap up. So what you do is you wait for it to come in, right? It taps that demand. Then the other confirmation you get is notice how you get this candle that breaks the opening high, right? So you get the candle that breaks the opening high, then you get a retrace and the beginning of buyers coming back in, right? That's something that Tanner has been emphasizing is don't always get in on the retrace, but get some kind of confirmation. And once you're there, that you get like some kind of a green candle close or strong, or candle, something like, let me show you like this candle here, where what's what I call a hammer candle, right? Where you got a strong tail, it shows that buyers are buying it up, right? That's what we got here. We got a little bit of a hammer and then a continuation of that move here. So this is a sign to get in that trade. This is more what I'll call a gap up retrace type trade. I use it for me personally, like I don't take this particular trade as often as I used to, but it can be very good, particularly when you're on the early stages of a breakout, right? So in the case of Google, we were right at the base of this pivot, right? You had this pivot happen here. You had a strong move here. You had another move right here at the base, right? So you could actually be a little more aggressive and play that gap up retrace trade. Does everybody see the difference in that? Any questions about how that works? We'll call it gap up retrace. That's what that move would look like. Now I'm going to move on to the next trade. This is Amazon. So this is more what I call like a classic setup. So let's talk about this where you got a high quality or high conviction trend background and a fresh, fast zone. Okay. So let's talk about first trend, right? So you can see, right, this is where the trade happened right here. But look at in the context of the trade, right? You had this pretty nice, strong trend, right? You had a little bit of a retrace coming back down into that trend, but the trend was still up, right? Trend was up. So I'm going to turn the drawings back on. And the other thing that's really important to this, look at this gap up move. This is what I call a fresh, fast zone. When I say fresh, the day of the trade is the first time it gets tapped. So it hasn't been touched yet, right? So when we get to this point right here, this is the perfect setup. So when you got trend is going up, you got a fast, fresh zone. All I'm looking for is an opening, right, where we get a nice, really sharp reaction at this demand zone, right, with a break of structure for a potential trade entry. Okay, so let's see what happened. We got a fast move down. Okay, let me see, go 1 minute. But look at that reversal, man. I mean, that thing just pivoted on a dime. So now what you got to ask yourself is, what do I use as a break structure, which we're going to talk about here. This will become an alternative way of looking at break of structure when you don't have this particular high break. Okay, so you see how you got a nice reversal move, right? Did not quite break that high, came down, formed consolidation, and then boom, you get this push up through consolidation. You could treat that as a break of structure when you get a situation where, let's start first things first, right? I had a strong reaction, buyers are present, came back in, never broke this high, right? Came in, formed consolidation, but then you get this strong upside move that breaks through that consolidation. And you see, got the win. And I think, if I'm not mistaken, this thing may have petered out later on. Let's see what went on the rest of the day. This is another good example why you set good conservative profit targets. See, if you tried to go all the way up to where it gapped down, you would have missed the trade, right? You would not have gotten a win. It pays to, particularly when you get like a big gap down like this, to be conservative with your profit targets. In this case, using that high, the opening high, as a profit target.
So in terms of like the break of the consolidation upwards, what time frame do you gauge on in terms of when should you enter the trade?
I mean, I think you still, 1 or 2 minute. I mean, right? I mean, what you're looking for is a push. Now, clearly, you're not waiting for this candle to close, because then you're up here, right?
Yeah.
So as soon as you get price moving above that consolidation area, you're taking that trade. Now, is that A plus breaker structure? No. So what do you lean on? So this is just how you stack things together, right? When you've got a fresh, two things to me would give me the confidence to take it. I got a strong upward trend, had a drop and it's dropping into a very fast, fresh zone. Now, if this zone was not fast, it was already been tapped before, maybe I wouldn't have been a good enough situation for me to take that trade. But because this, and also I think the Tom will tell is the volume. Notice the volume as another indicator that, hey, price is likely to reverse it, because I'm getting this peak of volume as it's coming into this demand area, right? You can see a pretty substantial, see that increase in volume right there compared to, you can see in the past history, that's a pretty significant increase in volume. That's another sign of reversal when you see that big spike in volume as it's coming down toward that zone. Now, again, would I call this A++? No, but I'm just trying to highlight different ways of taking those concepts, right? Breaker structure, because clearly that's not, if you wait for that to be a breaker structure, you're never taking the trade, right? And you can see after it got up there, which at that, you can see it kind of petered out as the day progressed. I think that's another reason why, if I'm getting in a trade, it's during that first hour. See what happens afterwards. Things just tend to peter out the later you get into the day. Good questions, though. All right, let's look at the hood. Let's see here. Okay, I think this might be also a gap up retrace. So this is I think a trade by Matthew. So as you can see here, we're kind of in this upward trend move in hood, and I think he had mapped. Let's see here real quickly. Bear with me. Apologize for all this annotation jumping out at you. Okay, I remember this now. Okay, this is where, if you look at the higher time frame, Brian, this is your trade, buddy. So you can correct me if I'm wrong in some of the things I'm sharing with you. This is just my observation. You had a initial uptrend, right, and then a downtrend coming into a pivot, right? So this is where you had a couple different signals. You had this downtrend move that hit this pivot zone. You got a pretty strong reaction. It never broke this high. It kind of rejected off of this and created another fast zone move to the downside. So what I saw, Ryan, looking at this was, okay, even though you want to be a little cautious because you're at this key support, you're not far from it, but the fact that when it reacted off of this, it never overtook this high up here, and in fact had another dump, that's just, we could still be in a downtrend here because it clearly did not progress to the upside from this move. And then we had another fast move before. So this is leading up to that day of the trade. Again, you had a fresh zone that had a pretty strong move. Now, you didn't break structure. You didn't break this low, right? It kind of came in here and held. And in the best case scenario, it would be something where we just break a structure like right here, right? But it was still fast. So that we look at the day of the trade, bear with me as I get back into that spot. Look at the same pattern here, though. Nice, sharp reaction, just touched the zone, broke the opening day low. Now, we didn't break the prior day close, but we did break the opening low, right? Came in, got a nice retrace, entry, and then took it. Basically, I think it's a good move, Brian, basically playing it to, the prior day close. The key to me, the difference here was you had this fast, fresh zone. Even though you were close to this pivot zone, the fact that it never really resumed any kind of upside move, and in fact rejected off of that, to me, higher time frame was still supportive of a downward move on that. And as you can see, I'm sure you wish you held this thing a little longer, right? Wow, look at that! Look at that sell off.
Oh yeah, definitely. After I looked at it, I was being way too conservative because I could have targeted the pivot zone lows.
Yeah.
Yeah, how the market has been recently, I'm like, you know what? A small win is better than a big loss.
This is where higher time frame is so important. Right. If I was looking at, let me just take some of the stuff off here for a second. I think we made our notes. So if I was looking at this, right, I say, wow, trend is up, right? From that perspective. But you really got to look at it from a longer perspective. If you look at it from here, right, that's clearly a downtrend. So this is where market structure theory is so important. If you think about it, okay, we came down off this high, right? So let's follow price. Price came off of this high. Look at that fast move, right? Had a little bit of a retrace, but then came down to this point. But notice it would need to have at least broken this high, probably this high, for trend to reverse. So until this high got broken or this high got broken, we're still in a downtrend. Your other clue, look at this compared to this. What's the difference?
It was a stronger move compared to the last move towards the pivot point.
See how it's hanging around? It's really not. If it was really like a trend reversal, you would have expected some kind of move off of this and taken out the supply. Like, see what happened here? Pivot came up, it kind of paused, but it didn't hang around here very long, and then it took out this supply zone right before it pivoted back down. So one clue. There's two things you want to look for. A, the reaction at the zone, and does it take out the opposing resistance? So if you think about opposing resistance, right, it's here and here, right? So if we were really in an uptrend, those zones have to fail. They never did. Everybody got that? So that's why it's so important when you're looking at trend. Don't look at the day before or even 2 days before. You really need to be looking about 20, 30 days back because you want to know where is this in relation to this story. So let's look at this next trade. This is one by Matthew. I think this is a demand tap. This is you got 30-minute demand here. What I like about this situation is you got the demands, and look at these annotations. They just go all over the place when I change the time frames. So I apologize for that. It just gets kind of wonky. But what I want to talk about is you get this demand zone, created a reaction that broke structure. That's kind of what created the impetus for this particular trade. So you look here on 5-minute time frame now. So this is at 9:30, right? Comes in, breaks prior day highs. And again, this is another example of, and this one, I would say my only critique of this particular trade, he actually got in here. If I was to actually take this trade, it would have been here. After you get this upside engulfing kind of break a structure candle, because once you get this double top, like this, see how it kind of formed a top and then it formed another top, it failed to break it. At that point, I probably would not have been looking to take a trade because I would not be as confident. Of course, this trade ended up working out, but I would want to see something more like this, right? That high get broken and then get in on the next retrace, right? To go on. This one was actually what I call a double top. So just kind of know going forward, if you see that, that would give me pause to take a long trade because it should have broken that high.
I have a question about the fresh zone and not fresh zone.
Yes.
Because you just showed that that wasn't a fresh zone. At what point
Correct.
is it not a fresh zone anymore? Like at what time span?
I mean, just the first time it's so think about it, it's all about probability. So it doesn't mean that you never trade it. What it means is the probability of your trade working out drops down. In my opinion, I typically personally all I do I'll hit multiple taps when it's a pivot area, right? If I've got a well-documented pivot area where price is multiple times, like you see here, check this out here, right? Boom, see that? This is what I would call, see how these runs start at this location? I will trade something multiple times when I know we've got, if it's not that, I'm much more leery about trading something that's been tapped more than once. Does that make sense? Because, is it Tim drawing on me? All right, Tim, let up, buddy. So you see that point? So I think it is a good best practice to first try to focus on fresh zone. The only exception to that rule, in my opinion, is when you have a documented pivot area where you know you've seen these runs start consistent, right? And you see that here, right? I mean, you can see it happen here and here. Actually, it's 3 times, but that's because the runs on the higher time frame meaning 30-minute, 4-hour, are starting here. So to me, that gives me confidence that there's buyers.
So that's like on some of these stocks that they kind of stay in the same area and they just kind of go back and forth, up and down.
That's called balance. Yes, you're absolutely right.
Yeah, and you can kind of trade on both the supply and demand zones or
that's
that
correct
area, and they tap those back and forth.
That's right. Yes.
Okay.
But good question. Good question. All right, let me go to, I think we don't that one. Let's go to AMD. So here's another good example of, okay, we got 30 minutes. Sorry about all my gobbledygook. But again, it's another example of, see how you had this move here, another move here, another move here. In this case, this is Dawson. This is a trade Dawson did. You had this is on AMD on the 19th. You had a nice demand zone, right, that created this move up. Now, it didn't break structure, but you still got a decent move up. And think about where it is, right? I am at this pivot area where price has been tending to revert to the upside, right? So I got a demand zone that created a move. So now I'm just waiting for the next day to see if I get a return of that, right? So if we go to the actual trading day, so here's an example of breaking out of consolidation. So, hey, Dawson, are you in the mix? I think I saw him yet. So Dawson, you add your comments, man, if you want on this trade. This is AMD. So again, you had this demand zone, right? Okay, pop. The next day, this is market open right here. Now, I would want to see a stronger reaction, but notice these lows are holding. It did chop around a bit. This is another example. See where it broke out of consolidation, right? Got in the retrace and played it to the upside. So another example of breaking
right?
out. Yes, sir. November 19th.
Yeah, if it's the one I'm looking at, it was a TLM play and also a supply and demand play.
It was both. Okay, let me put TLM. Let me go to that day. I think it'll populate correct. Put this to the test. Let me just, I see it right there. Yep. Boom. Kind of got acceptance, right? So based on time spent in the zone, got acceptance and played it to the other side. So again, that's a good example of both. So again, I like, to me, it's kind of, to me, I hope it was indicating to you guys is you want to take that high time frame. Notice he wasn't playing TLM short, playing TLM long, which is in alignment with what was going on in the higher time frame, right? You had these pivot zones. You had another nice reaction to the upside off that zone, right? Which kind of gave you that upside bias for that particular trade. Now you notice here, notice though, we got a change in trend here. We did get a low break. There we go. Let me go to 30-minute. So this is another. This is one that Eduardo did. Notice here we got a nice. What I like about this is you got a zone, which is this is very significant. That broke price to this point had been pivoting to the upside. This zone dropped that thing completely out, right? So now the fact that you got to break a structure, right? This zone, this pivot area no longer hold. Now you got this downside trend developed. So you get this fresh downside zone that broke the lows. Now this is where you did not get a opening really like right at the zone. So if you look at, let me go pull and zoom in here. This is where, again, you don't have a break of structure. Okay, so I will definitely say this is not what I would call a break of structure. What you're trading off is you're trusting you had this zone that broke structure. So you have a down, pretty high conviction, higher time frame down bias. What confirms that is the reaction you get, right, off that. It didn't even barely tap the zone. And then you get this big sell off, right? Then you got to retrace, right? This is what the trade he actually made. Now, if you want to be a little more conservative with this, which I probably would have done myself, is I would have waited for two lower lows. So you got one low here, and then you get your second lower low here. Then play the reach. Since this was the 50% retrace high, you can use that as your stop. You could have actually shorted that second lower low. Actually, probably had a higher profit target for that particular situation. So I would say that my only critique on this one was we didn't get a really strong break of structure signal. What you're really trusting in this situation is I got this fast zone that broke structure, right? I have a strong, high conviction downtrend bias. I got the reaction to the zone, right? That confirms that bias, even though I didn't get a break of structure. So questions and comments on that. Let's go on to PLTR. This is another Ryan trade, I believe. Actually, Dawson and a Ryan trade. We got two of them here. So this is one where looks like Dawson, I got you doing a short off of again, it's another good thing here. You got you were approaching this support area, but this supply zone broke through that, right? So that gives you some confirmation to play it short here because you got this, again, the supply zone that kind of broke that support. Now, if I look at it going to 5-minute time frame, let me jump in here. This is on November 21st, Dawson, if you're watching. This is on Palantir. You got it, again, this is, let's see, the day of the trade. You had it come up, tapped it, reversed off of it. It looks like what you did here is you waited for that down candle to take out support, right, to take that trade short. So I think the key thing here is you got the supply holding the trend to the downside, right? This down move was held, right? Then you got this break of structure in terms of breaking the prior day lows. Now, I would say the only, again, if you're thinking about A++, what would give me pause on this is you do have this major support, right, over here, right, that was the start of this big move up, right? So you just want to be careful when you're shorting into that, right? In this case, you can see it took it out. It definitely took it out. Let's talk about higher time frames here. I'm going to turn this off so we can kind of see what's going on. I'm going to go 30-minute. So at this point, okay, you had, right, we took out this support, right? This is the kind of kilo support that got taken out. Actually, I'm sorry, it was down here. This support got taken out. But then you got a reversal and you got one high retrace and another high, right? So you start to see one of my general rules of thumb is that once you get two consecutive higher highs with retraces being respected, I start to lean more on my longs, right? So you kind of got this one high, boom, and another new high, right, with a retrace. So in this case, I think there was this is a Ryan trade where you had a zone that broke a prior high. So that's always the best situation. You get a fast zone, right? Even though this looks like a down candle, it was a gap up. So think of it, there was some kind of move from the prior day close to the opening that broke the prior day high, okay? This prior supply resistance, okay? Then it kind of came in, bounced around. Then you had a gap down right into this zone, okay? So let's look at what happened here. This is a little bit more cleaner break of structure here. You can kind of see right here, again, pivot off that zone, broke the opening high, right? See that close above, not just a wick, but closed above the high. Then you got to retrace an opportunity to get in long, and you see it progress very well. Never went negative. Hit your profit target. This is kind of interesting story because if you look at the higher time frame up to this point, Apple was kind of what I call in more what I call a balance. You can kind of see it here where it's kind of balancing between. Now, the most immediate trend, right, coming out of this pivot was to the upside, right? But it's approaching this resistance up here. I would call this kind of like a neutral bullish bias. Clearly you can see you had a clean breakout here, a little more bullish, but it kind of hit this area pivot. Again, this is another example about pivots, right? Look at this, once, twice. Actually, you can see it 3 times. You see all the times this thing's got hit and moved. So that's why I pay attention to those areas, right? So you see you got a nice reaction move. I see Dalton's got it. So again, you had a created demand, right here, right, and then looking for a reaction to that the next day, right? So let's look what went on here. So this is, again, another good example of, okay, you did have a bit of a prior day tap of this demand zone, but then right at the open broke the prior day high. That's clean. If there's one thing that gives you confirmation, look at that move off of the open. Clean break of structure, waited for the retrace, got in after the retrace, and played it up. I don't know, is Kevin here? I can't remember if he was or not. But again, that's another clean. You can't ask for a better break of structure than that, right? Look at that clean move, all in 1 5-minute candle. Waited for the retrace, tapped it, and then notice it never went sideways, right? It never had a negative situation where price kind of meandered around here before going up. It just kind of steadily reversed. That's what you want to see in a trade. But to me, it starts with, right, look at the higher time frame context. We're in a pretty solid upside trend move. So that sets you up for success when you're playing these zones. You want a zone that is aligned with the trend. In this case, we had an upward trend, took that trade off of that. Got the same thing here. A nice move, kind of up, move off of that. This is another created demand situation where you can see this move here. Then you had this gap up. Let me show you this one here. Kind of a gap up, right? Break struck came in, tapped it, retraced again. You retrace, I would say break of structure is not clean here, right? Yeah, this is where you got to be careful, in kind of reading. This is something you'll learn over time. Yeah, being patient with those break of structures. I probably would not have taken this trade, but you got a lot of the elements together, right? You had this move back here that gave you confidence that buyers are going to step in over here. You had a nice solid move over here, had some consolidation, then an up move off of that day. Got to win. I would say the only thing if I were to critique this is, you want it for a confirmation through a break of structure. Now, what you could have done here, let's look at this. Now, looking at this, notice you had a one high, a retrace, and then a second high and a retrace. You possibly, excuse me 1 second, could have taken this trade here. Let's see if we got it. Let's see here. Yep, you got a 50% retrace on that low. Got a clean break of structure here, right? Another 50% retrace low here. You could have, this is a little bit more kind of playing it out, but you see the market structure is pretty clean here. You could have gotten in on a retrace here, if you want to use a more conservative stop, you could have used and see if you had a good profit target, but you would have targeted this as your stop. That would have been your potential. If you wait for a more clean break of structure, you could have waited for this high, second high to form, get on the retrace, and then use that that's a 2-hour trade. That's still solid. Does everybody see that? So, if you want a more clean break of structure, what you could have done is waited for a second new high to form, get it on the retrace for that high, use that 50% retrace low as your stop, and that could have been a winning trade there.
Just from watching this is to not just look at to look at the trends for 30 days, 20 to 30 days, look at everything, like the bigger picture, not just even the day before, but look at everything in one big picture to see the trends.
And particularly, I tell you, add to that, Shauna, is looking at where the runs start and stop. We go back and just looking at Netflix here.
Good. I was actually looking at Netflix because I know that Paramount's trying to buy Netflix, and
right.
It's another one trying to Sundance, I think.
Sure.
Is also trying to buy it. So I was really interested in it because of the news. And I think that's another good thing is to look at what's going on, such as Netflix, to see what's happening as the news, basically. Look at the news.
You bring up a good point. That's why the Fed meeting today was so important, right? Because if you think about price, right, there are basically 3 main factors that drive a value of stock, right? One is the earnings of the company itself, right? How profitable is that company and its future outlook? Second, kind of related to that, is the sector itself, right? Like there's been a lot of AI hype, right? So if you're a company that's somehow connected to AI, or that could be a a bonus or not, right? Depending on how you think about AI. It's the company, it's the sector, and then it's, of course, the overall macroeconomic environment. Those are the three things that drive price. So when you have things like a Fed meeting like you had today, because I don't know if y'all noticed, I've been kind of watching to see if there's going to be some kind of sector rotation out of tech, maybe into more traditional industrial consumers, because those macroeconomic factors will end up reflecting where price goes, right? So I want to look at price, but I need to understand a little bit about the story. So for example, let's say like Netflix is dropping off. Of course, I tell you why. Let's talk about this. Why is this happening? If anybody's been out watching the news, why is that happening?
Besides it being for sale, or
because the merger deals look like they're going to fall through, right? Because you saw Trump kind of walk back some of it. So I'm not necessarily saying, oh, this is not. I'm again thinking trading, not investing, right? Two different things. If I'm looking like to trade a bounce tomorrow, let's say I got this key demand zone right here, right? Let's say there's a demand zone. Just because it's hitting this demand zone, knowing what I know, that's what's driving price down here. I'm not going to be jumping in to buy here, thinking it's going to pivot. Because why?
Because of the news.
As a trader.
Yeah.
So what's happened because of this news, they're still pricing in low, right? They're trying to discover what's the low value, right? At some point, it's going to pivot, but based on that new news, it's still being priced in, right? So I don't want to just jump in here and say, yeah, it's going to bounce here, because clearly there's some news that's driving that sell-off. But let's talk about again so let's look at this situation, right? If I was looking at this chart, I'd say, wow, if I'm looking at this and I'm trying to base my trend off of just that, I'd be going in tomorrow saying, man, it's going to keep going down, right? But if I know about where things start and stop, I got this demand zone down here, and there's nothing changed about the news about the company, right? Assuming the economy, nothing changed about the economy, about the sector of the company. I'm probably expecting a pivot at some point here or down here, because nothing has materially changed about the prospects of the company. This is just price, right? Price goes from here to here, then from here to here, right? This is the natural ebb and flow of a stock. Assuming nothing's changed about that company, no major news, right, that's driving it, I'm probably looking at a pivot, which we'll see, right? Okay, it happened down here, but you kind of get my point, right? Where there was a move and then it reversed back to the upside off. And if all I was looking at was this, I would have missed that move. Ryan, what type of zone you want to trade?
In terms of this, I'd make sure it's aligned with the trend.
Okay. All right. What else?
Good reaction to the zone.
That'd be your lower time frame. What about the speed? What about the speed of the zone?
Yeah, it has to be a strong zone.
Yep, strong, right? And I think I saw Chris talk about fresh, ideally fresh. And I'd say another good sign of a strong zone, break structure, right? We saw some trades that broke structure, right? The zone actually, it was not just a fast move, but it broke structure. So yes, all those things. So that should be on your checklist. To have a zone aligned with the trend. Is it strong, break structure, fresh? Now remember, the only time go ahead, Dawson.
Just equal or increased volume into the zone.
Okay, that'd be a lower time frame. Got it. I'll put that in there. Gotcha. Good.
And is lower time frame like what would
2
you
minutes,
consider?
5 minute, 1 minute? That's the actual day of the trade. So think of the day of the trade is when you see the price market open. What does price do once it opens? Oh, I got a good one. What do you think about the requiring the opening at or near the zone? What do y'all think? And why would that be important?
Those have always been pretty decent trades, in my opinion. They seem to work out well, open into a zone when you get a good reaction at least.
That's right, because it's also easy to. So let's say this is our zone, right? So if price opens up down here and it does this, it's hard for me to get a break of structure read. Whereas if it opens up here at the zone, it just has to do that, and I got a break of structure. There's my break of structure right there. See what I'm talking about? If it's the further it has to go, the other thing too is usually the later in the day. It may not tap that zone until 10:30, 10:45, 11 o'clock. And what happens as the day gets older, right? The volatility dries up and goes down. You want it to open up at or near that zone.
And so the higher time frame is longer than a day, or?
Yes, as far as when you look at trend, you're looking at least 2 to 3 weeks back.
Okay.
And what you're trying to do is you're just trying to get a feel for the runs. That's why, because if you don't, you miss this, right? If I'm not looking at this, I'm not finding where these, and really what you're doing is you're just trying to get a feel for where do these runs stop and start, right?
Yeah.
Because that's where the speed happens. Speed happens at these points. This and here tends to be more chop, right? But buyers are here, sellers are here. And so it kind of helps you prioritize. If you can focus your trades in these areas, you're going to be a lot more successful. The problem is we're always trying to find a trade that may not always be there, is we're trading in the middle area. So the reason you want to map these are your opportunities for the fast moves, where these runs start and stop.